weekend all. Ira Epstein of Linn and Associates, and yes, I'm back with your weekend edition, and this is for Friday, November 22nd, 2019, and we're about 2 o'clock in the afternoon. So no, I don't have the settlements in front of me yet for this metals update, and I don't know where the stock indices will be. I scratched my eye terribly past few days, so I have a doctor's appointment again that they just want to check it. I didn't do any damage for an operation, but if you've ever rubbed your eyes and you do it the wrong way, I guess I did something like that. In any case, as I'm looking at the metals, we're in a consolidation phase in a market that seems to have some downside to it. Now the copper's up, and I think the copper's up off of this thinking. We know the House and the U.S. Senate have both passed bills that are condemning Hong Kong. At this point, the committee has gone through it, and I understand the bill's back to the president. You'll notice you're not hearing he's signing it. And I think the message the president wants to send is no, it's not that he personally may not want to get behind it, but he'd really like to get this phase one deal done. And maybe it's in his best interest, if they're going to have the first veto ever of something he does, it could be over this. That does not mean he favors what's going wrong for the protesters in China. That's my take on it. But you have to have the negotiators be able to get something done. If he signs that bill, and he may be forced to with the politics, just by holding off, they realize that his hand's been forced. He's in a no-lose situation as I'm reading it, and that could be why the copper market got a bid as the other metals aren't getting a bid during the day. That type of thinking might also work a little bit in the stock indices, as you can see. As for the dollar, it won by Miss Lagarde. That's the head of the European Central Bank. She had her first policy speech today. And instead of talking about what the European Central Bank's policy is, she did what I thought she would do, and she went out and told Europe, spend on infrastructure. Spend your money. The bank can only do so much. She did it without the words that I'm giving, but that was the message that she gave, and you saw the currency markets take a tumble on that message, but she's right. Why is Germany not spending on infrastructure? They're broke? Come on. Spend the money. Not pensions, not the other parts. Put your people to work. Make your economy grow. Do things better. That was what I think she did. As for the energy market, notice it didn't lift on that news, and I wouldn't expect that it would. Although on the energies, I also think they have problems. You know, OPEC meeting is right around the corner, and it does not sound to me as though Russia wants to join in with further cuts, and I'm not convinced they'll even stay with the current ones. And then they've got to get their other members into it. Today we're going to get the Baker Hughes numbers on the U.S. rig counts, and they've just been slipping each week, yet production's near all-time highs. Better technology. On the monthly bar chart of gold, as you can see, you've got lower highs, you have higher lows. You could argue, maybe if you can get down at the end of the month further, that we get a different pattern out of that, but I'm not there yet. If the market wanted to totally let go, well then the 100-month average and the 18-month average between 1348 and 28 could come into play. I have my doubts the market wants to go that low. So I go to the weekly chart looking for where we are. Now if we take a look, we're at 1463 right now. If I come back to this close, we were 1462.90. So we're basically where we were. The bias is down. We've been in this corrective mood. If the market decides to pick up, then I could look for resistance back at this 1490 level. Now, I heard some traders today talking about the fact that, you know, gold has a tendency to rally later. It does, but not at this time. So, the seasonals just aren't there for the upside right now. When we go to a weekly bar chart and just see the action, there's nothing really good looking or terrible on the chart. You've got a higher high, lower low pattern. That is not a trend. The market is underneath the 18-week average, so we know the bias is down, but that's also a resistance point on the way back up. But when you have a higher high, lower low, trying to say it's a trend, it isn't. Now, what could set up that downtrend? Get under the 1446 level, you could do that. Take out this week's low and don't come back for the high. That could do it as well. The swing line would then turn with lower highs. You've already got the lower lows, but you're not there yet. That's the what ifs. In terms of if you fell very hard, one of the reasons I don't think the 100 and the 18-week moving average, rather the monthlies that were all the way down there, is this, the Bollinger Band, the 1435 level. I'm seeing how it's narrowing itself coming to the market, and the top one's coming in, and this is the narrowing that I'm looking at. They seem to want to come together here. As we come to the momentum of the market on the weeklies, it's down. Remember, I don't look at momentum on weekly charts overbought or oversold. It's either up or it's down. When we come to the GLD, momentum is down, higher high, lower low. If the market were to break again and take out 136.19, well, this number's climbing pretty good. I don't think there's a lot of downside because I think that the Bollinger Band might want to stop the market on the decline. Is there a reason to be bullish? That's not what I'm saying. I don't think there's a lot of downside. It's not the same as me saying, the market's ready to go up. That's not what I'm saying. In GDX, on the weekly chart, you still have lower highs, lower lows. Resistance comes in at the 2782 level. If you were to take out 2818, that still would not create an uptrend. You'd have a lower low, higher high. So this is your battleground, and momentum is still down in this market. In the gold-silver ratio, on the longer term, the weekly chart, you found initial support right in here in the 83 area. You rallied back to 86, not very big, and it wouldn't surprise me if the market wants to hang itself right around that 18-week average of closes. As for the silver, it's still very much in the bear camp. You've got the lower highs, lower lows. Rallies are still looking like if they went up, 1736 area would be the resistance, and you have momentum down. In the copper market, copper couldn't let go if prices were to take out 261.30, 300 points from here. Why? Because under the formation that I'm looking at, we have been fighting this battle at the 18-week average. We had this one poke down to the lower Bollinger Band, made a run up here for that upper area. Now, if you were to take out 261.30 and stay under 261.75, you would then have lower highs, lower low, under that number, putting into play the lower band again. Momentum's just sort of going flat on you here. It wouldn't take a lot to turn it up or down, so I'm watching. But the Bollinger Bands, I'll stick my neck out. Those are your real resistance and support lines. In the platinum market, you reached down last week to hit the 100-week average. That seems to have been a number that this market's paying a bit of attention to, as you can see. Went back to the 18-week. The market finished off at 895.20, under the 18-week average. So what's my pattern here? Well, that becomes the interesting part. If we come all the way back to right here, that high was 964. Then the market falls down, and I don't think you'd argue we got lower highs, lower lows. We then come up, make that higher high. We get up here to 950, 990, and from there we fall apart, and we're getting the bounce in the market. I'm going to argue you got a higher high, lower low, no trend at all, and just sort of respecting this whole area right there. In the palladium market, this could be the market that comes back from the dead. Momentum has turned back to the upside. It was trying to turn down last week, and now it's flattened itself out again. The longer-term pattern is higher lows, higher highs. The pattern falls apart if you take out $16.50, $8.50. That's almost $100 an ounce away. Don't take that out, and as a technician, take the name off the chart. Maybe that upper Bollinger Band's in play. In other words, I think the bulls have done the magic act. They've held the market together. In the dollar index, do you not think that the 18-week average is your battleground? From back here, these are weekly charts. How often are you hitting it and not going anywhere? The overall pattern is one of lower highs and a lower low. It's countered and nullified because the market's finishing around the 98.19 level, which is over the 18-week average. You actually turn bullish on this chart if the market can take out 98.30, because that could give you the higher lows, the higher high, and you're putting into play then the upper Bollinger Band at 98.97. So an interesting chart. No one has control of it going home. That's what I find fascinating. I want to remind you about my morning subscriber video. Each morning at 6 a.m. I'm recording a video on all these metal markets. In fact, the financial markets, the soft commodities, and the like. And the idea is to give you trading ideas that I'm seeing off the charts. Does that mean every market every day has a trading idea? Yeah, but it doesn't mean it's bullish or bearish. Could be neutral, could be one of the three. And I will stick them out and tell you what I'm seeing. If I think there's a point of entry, I'm going to say, I think as a pro, you go in right here. Here's where you come out of the market. Here's where you come in. If I don't see anything like that, I'll say, here are the resistance support zones as seen on the chart. It seems to be in the middle of nowhere. What do you want to do with it? I also create the video in such a way that there's a bar, if you're on our website, for example, that you pull, the scroll bar, and you know the exact section you're in, so you don't have to go to areas you don't want. Everything's meant to be timely. Then I tie it together with a free phone app, so that when I put this out, it gives you a push notification, not a text, it's free. Push notification, the video is ready for viewing. If you click it, you're going to be able to watch it. It's all included right there on your phone. You can also, of course, go to our website and watch it. The push notification either way is going to tell you that it's ready for you to view. And you can come back and view it several times a day. How do you get it? Go to our website, under the word research, read our different research programs. We offer an introductory offer, $7.95 for the first 30 days, and no, you're not committed to anything. You decide if this fits in with your ideas. I think you'll find that it does, but that's up to you if you're a market technician. If you're not, it's not about fundamentals, folks. It's about charts. You can always click up here. If you're watching me on YouTube, that'll take you right there. I'm Ira Epstein. You have yourselves a great weekend. I will see everybody again come Monday morning. Take care.